We will give it just a few more seconds to allow everybody that's joining us today to have an opportunity to get into the meeting room. So please be patient with us while we allow more people into our webinar. We will go ahead and get started with our webinar. Thank you for joining me today. Today's webinar is on understanding your notice of appraised value. This is part of our 2022 property owner webinar series. We are recording this, so at the end, we will post this on our website. So if you have any questions and would like to review it, you can go back and rewatch the video. Or if you think there's somebody that needs some information that would be benefit from this, you can also give this information to your friends and families, and they can watch the webinar as well. As we go through the webinar, if you have any questions, please use the Q&A in the chat box, and we can put this, we'll answer those. We'll probably wait till the end of the session to answer the Q&A questions. But again, put them in the Q&A and we will answer as many questions as we can at the end of the session. So first off, our notice of appraised value. The appraisal district, we're required to appraise property annually to determine the market value and then report those market value findings to taxpayers and the taxing units. For the purpose of the appraisal district appraising property at market value is to ensure that each property owner pays their fair share of the tax burden based on the value or the proportional value of their property. So that, for example, somebody that is in a mansion is not paying the same value as somebody that might be in a mobile home. So we appraise properties at market value. It's our constitutional and state law requirement to appraise at 100% of market value. And we do that every year. January 1st is our assessment date. So we're appraising properties as of January 1st. And those determinations of that market value, that report of our market value determination, that's known as the Notice of Appraised Value. And that's given to taxpayers each April. We will be mailing our notices of appraised value. They'll start going in the mail on Friday, April 15th. So you should receive them shortly thereafter. But this is just to explain to you a little bit before you receive it, what to expect in your notice of appraised value, how to read that notice, and how to understand the information that we're providing to you. I want to tell you first off, don't panic when you receive your notice of appraised value. You've heard the news, the Austin market is skyrocketed. Homes are selling for more than they've ever sold for before. We're breaking records. Every month it seems we're breaking a new record. But I want you to understand and not panic and understand that we're only one part of the equation. We are determining what your share of the total tax burden is, but the other part of that equation is the budgets and the tax rates that get set by your taxing entities. And that usually happens in August. So even though market values may go up in the appraisal district, that does not mean that you're going to pay more taxes unless your taxing entities adopt tax rates that are significantly higher. They should not bring in much more revenue than they had the previous year. They've got an allowance of 2.5% to 3.5% on how much additional revenue they can bring in without having to go to the voters for a voter approval election. So there are some protections for you. Again, the appraisal is only part of the process. The other part is the budgets and the tax rates that get set. There are some protections for you on the tax rate side, but there's also some protections for property owners that have homestead on the appraisal side. And we'll explain a little bit more of what those protections are and where to find those on your notice of appraised value. So finding your notice of appraised value, again, they're going to be mailed out this week starting Friday. If you don't receive or haven't received your notice, you can also go to the property search feature on the website, traviscad.org, to see your 2022 values. Again, those will be up and available starting Friday, April 15th. And then we will also post an online version of your notice of appraised value probably a week after our mail notice goes out. You'll be able to pull an online version of your notice of appraised value on our website as well. So notices will drop in the mail. They drop in the mail starting April 15th. That's Friday. The website will be updated on April 15th on Friday. So you'll be able to see your value on the website. And then a week after that, we will post online versions of your Notice of Appraised Value. And you can pull that from our property search website as well. When you receive your Notice of Appraised Value, there's some information on that Notice of Appraised Value. The very first section that you're going to see is just property information. It's going to give your property ID, and that's really important for you guys to know where to find that property ID. And that's going to be in that top corner right there, and it's going to give you your account number. You can use that account number to search for your property in our property search. Now, on our website on property search, you can search by your name, you can search by your address, but the quickest and easiest way to find it is if you put in your property ID. The information section will also give you your e-file PIN, and that's an individual PIN specifically for you that's going to give you access to the online portal. There's more information that you can see on the online portal if you file your protest that you may not be able to see in the property search. There are certain kinds of confidential information that we can't share in a general property search, but with your PIN, you can get access to that confidential information and see that through the online portal. There are 3 key terms that's important for you to know, and we will talk about each one of these in more detail as we go through the presentation. But the 3 key terms are market value, which is what your property would sell for. Assessed value is the reduced value of your property after your homestead limitation calculation. And then taxable value, which is the value after exemptions and is the value that is actually used to calculate your property taxes. Again, we'll talk about each of these in more detail as we talk about the information on the Notice of Appraised Value. So underneath the property information, you're going to see this grid on your Notice of Appraised Value. And it's going to give you information about those 3 market values, or those 3 key terms that I talked about: the market value, the assessed value, and the taxable value. So let's get into a little bit more detail about each one of those. First off is going to be the market value. In this case, in this example, the market value of the home is $601,027. Sorry about that. So that's the market value. That's what we're determining the property would sell for as of January 1st. Again, our constitutional requirement is to appraise all properties at 100% of market value based on January 1st assessment date. And that would be, what would the property sell for? We use information from sales that have occurred in the previous year to make that assessment in that determination of market value. So market value, again, that's what your property would sell for as of January 1st. Now, market value is set fresh each year. And again, January 1st is the assessment date. There is no limit on the increase or decrease of market value. We are going to reflect whatever we have seen happen in the market in the previous year. So it's what other properties are selling for in the past year is the market value. And again, there is no limit on the increase or decrease of the market value. The other information on that notice, that second side, right beside the market value, you're going to see the assessed value of your property. And this is the one that has the limitation, the homestead limitation. In this case, the property value is $601,027, and that's the market value. But the assessed value, which is where the limitation comes into play, is $338,897. So you can see there's a substantial difference between the market value and the assessed value, and that's because of that homestead limitation. So the assessed value is the reduced value of your property after the homestead limitation calculation. This is the limited value. Again, market value is not limited, but your assessed value is the one that is limited. Now, only properties with a homestead exemption are eligible for the assessed value limitation. And the first year that you qualify for your homestead sets your base assessed value, and the actual limitation does not kick in until a year later. So the first year that you qualify for your homestead sets your base value, and the limitation starts kicking in for each year thereafter. The limitation is a state mandated calculation, and it's a calculation that is done each year. The assessed value is whichever is lower, last year's assessed value plus 10% or the current market value. So here's an example that we can look at, and this shows the market value and the assessed value for property for years 2020, 2021, and 2022. And you can see the market value in 2020 was $376,600. The assessed value was $280,080. And so which one was lower? It was the assessed value, the assessed plus. So that became the assessed value for that year. In 2021, the market value went up to $385,400. The assessed value, which is last year's assessed plus 10%, was calculated at $308,088. So $308,888 is the current assessed value for the current year. And then finally, in 2022, the market value went up to $601,027. The assessed value, which is last year's assessed plus 10%, is calculated to be $338,897. So the assessed value is the current assessed value is lower. So $338,897 is the assessed value for the property. In the Austin market, it's been a very long time. Our market has gone up so much that we usually will see property owners get the last year's assessed value plus 10% being the lower. We haven't had a system where our market values have gone down significantly. So typically for most property owners, it's usually going to be last year's assessed value plus 10%. The next section on that, after you look at your market value and your assessed value, is information on your taxable value. Now, your taxable value can be different for each one of the taxing entities that that can assess you. So each taxing entity gets to choose what they're going to grant in terms of what exemptions they'll grant and how much they will grant in those exemptions. The taxable value, again, is the value after any exemptions, and that's the value used to calculate what your property taxes are going to be. The assessed value minus any exemption amount is your taxable value for that taxing entity. And again, the taxable value for each taxing entity can be different because each unit gets to decide if they will grant an exemption, and if so, for how much. So for an example, school districts have a state mandated, meaning all school districts must grant a homestead and an over 65 exemption. It is state mandated that those exemptions must be $25,000, and for an over 65, they must be $10,000. That is state mandated, it will happen. Now, there is an upcoming election that may change the homestead for homesteads and may increase that amount, and we'll talk about that a little bit later. But for right now, as state law exists, the homestead exemption amount, state mandated for school districts, is $25,000, and for over 65, it's state mandated that it must be $10,000. Other taxing entities have a local option that they can choose. For the homestead exemption, they can choose a local option of a percentage amount, any percentage up to 20%. So for Travis County and the city of Austin, they are both granting the maximum they can in the homestead exemption of 20%. Austin Community College also grants a homestead local option, but in their case, they are granting a 1% homestead local option exemption. For the over 65 exemption, the local option for the cities and the counties and other municipalities is a dollar amount, and they get to set what that dollar amount is going to be. And again, each entity gets to determine what that amount is going to be. For Travis County, last year, they set it at $100,000. For the city of Austin, they set their over 65 at $113,000. And last year for Austin Community College, their homestead over 65 exemption was $164,000. So you can see how those amounts vary for each taxing entity, and that affects what your taxable value calculation is going to be. So an example for Travis County of how you calculate what your taxable value is. Given your assessed value, and we know that that's $338,897, Travis County grants a 20% homestead exemption. So 20% of that number is $67,779. That's the amount of your homestead exemption. In this case, this example, this property owner also has an over 65 exemption, and Travis County grants $100,000 for the over 65 exemption. So the $67,779 plus the $100,000 gives them a total of $167,779 in total exemptions. So their total exemption amount is $167,000. You take your assessed value, $338,897, minus your total exemption amount, $167,779. And that gives you the taxable value of $171,118. So the tax rate set by Travis County will be multiplied against this taxable value to determine how much property taxes this individual property owner will pay to Travis County. An example for the school districts, and again, the school districts have state mandated exemption amounts that they must grant. In this case, it's state mandated that they must grant the homestead exemption of $25,000. And Pflugerville ISD, in addition to the state mandated $10,000, they also grant an additional $9,100 of local option over 65 exemption. So the total amount of exemptions that Pflugerville ISD grants for an over 65 property owner would be $44,100. So the assessed value of $338,879 minus the exemptions for Pflugerville ISD of $44,100 would mean that their taxable value would be $294,797. And this times the school district tax rate will equal how much taxes they will pay to the school district. Important for you to know if you are a property owner that is over 65 or disabled is that for school districts, that over 65 or disabled person's exemption also grants you additional tax relief in the form of a tax ceiling or a tax freeze. So the year that you qualify for your over 65 or disabled person's exemption, in this case, it's 1996, that amount of taxes that you pay in that year become frozen at that point. That becomes your ceiling. Your taxes may go below that for Pflugerville ISD, but they will never go above that amount that was initially set in the year that you qualified. So in this example, in 1996, their school district taxes was $1,464.48. That is the maximum amount that they will ever pay as long as they have that over 65 exemption for Pflugerville ISD. Underneath that breakdown, it just gives you a little notice about the exemption. Remember earlier I had mentioned that currently the school tax exemption is $25,000. There is an election on May 7th that would increase that election if it's approved by voters from $25,000 to $40,000. So on our notice of appraised value, because that election hasn't happened and it has not yet been passed, it's still $25,000. But if it passes on the May 7th election, that exemption amount will go up to $40,000. That'll happen automatically. There's nothing that property owners will need to do. We will automatically update our records as soon as it receives voter approval. If you have any questions about how to vote in Travis County, you can go to votetravis.com. They will give you information about what your polling place is, where you go to poll, and more information about what your ballot looks like. But one of the items on that May 7th election is a ballot item to increase the homestead exemption from $25,000 to $40,000. And again, if you qualify for the over 65 exemption, there's more explanation about that tax ceiling. Again, I explained that that becomes the maximum amount that you will pay in your tax ceiling on the date that you qualify for that exemption. That is calculated, and your ceiling never changes unless you add new property, new value to your property. So if you were to add a new wing to your home, that new value would be incorporated and would adjust your tax ceiling. But barring you doing anything to increase your property and add new square footage to your property, that tax ceiling is set. On the second page, you'll get a breakdown of your property's value, and you'll see last year's values and the proposed 2022 values. We'll give you the market value of your buildings and your land, each item, and then also the total market value. So you can see a year-to-year comparison. You can also see that year-to-year comparison of your assessed value. In this case, it went from $308,088 to $338,897. And then the homestead cap. This is how much money you are saving because of that homestead limitation. And you can see because market values increased this year so much, that your savings that you're getting because of that homestead limitation also increased substantially. We also provide you information about the taxation side, the setting of the tax rates. And that is something that happens later in the year. Again, beginning August 7th, that information will be available. You can go to texas.gov/property taxes, and you can find a link to your website. So wherever you are, whatever property you may own in the state, you can go to texas.gov/property taxes, find your county, and get a link to your county's website to get more information about the tax rating side, tax rate setting side. So in this website, this Truth in Taxation website, it's going to give you information such as for your individual property, what is your taxable value for each of your taxing entities? What are the rates that each taxing entity is going to be proposing? What is their no new revenue rate, which is what is the rate that they need in order to raise the exact same amount of money as they raised the previous year? And again, that no new revenue rate is important because any decisions that they make to set a rate above the no new revenue increases the amount of taxes that you have to pay. But we'll list on that website for you their no new revenue rate, what their proposed rate is, and then also what is their voter approval rate. So if they go above the voter approval rate, it automatically calls for an election in the November election, and you can vote to approve or disapprove that additional tax rate. So there's a lot of opportunities for you to participate. That website will also give you a link to the websites for each taxing entity so that you can see what they're proposing in terms of their budget. And it also gives you the dates and times and locations of their budget hearings and their tax rate setting hearings so that you can participate in both sides of this equation because they are equally important and both have a really important role in the total amount of taxes that you pay. If you believe that your property's market value is incorrect, you have a right to file a protest. If you file a protest, the deadline to file the protest is May 16th. That deadline may be different if your notice of appraised value was mailed later, but it's May 16th or 30 days after the date your notice of appraised value is mailed, whichever is later. So May 16th, we're mailing our notices starting May 15th. We're mailing our notices April 15th. So 30 days would give you that May 16th deadline. You can file your protest either by mailing it to the appraisal district at our P.O. Box. That's P.O. Box 149012. You can drop it off in person at our location at 850 East Anderson Lane, or you can file your protest online at www.traviscad.org/protest. Our formal hearings will begin June 21st, and they will be held via remote telephonic hearings with a video component. But if you want to request, you can request to have an in-person hearing as well. If you have not filed your homestead exemption, you can still file a homestead exemption. The deadline to file your homestead exemption is Monday, May 2nd, 2022. And again, the exemption amount that gets reduced from your tax assessed value is an important benefit to claim for a property owner to reduce their tax liability. So it's not too late to file a homestead exemption. We've done a whole webinar series on exemptions, on homestead exemptions, and that's on our website. www.travistaxes.org/webinars, and it's homestead exemptions. So if you want more information about homestead exemptions and how to apply for those, I encourage you to go into our website and look at that video. The protest form will be included with your notice of appraised value. So if you want to paper file, you can complete that protest form. Again, the deadline to file that protest is May 16th. We also provide information from the comptroller about your taxpayer rights and remedies. So it gives you more information about how to file your protest, what does the ARB do, what's the process that goes through for an informal and formal hearing. Again, that's included in the taxpayer remedies pamphlet, and that is written by the comptroller and provided to you in your notice of appraised value. But we encourage property owners that if they want to file their protest, we encourage you to e-file your protest. We've got an e-file portal that you can go to and upload or protest online. You get immediate confirmation of your protest having been accepted. You can easily upload and review any evidence from the appraisal district, and you can review and accept any settlement offers. The initial offer based on the owner submission, and then possibly a second offer after an informal meeting. So you can go through and do all of your business with the appraisal district in terms of protesting on the portal. Again, if you do it on the portal, you're going to get access to that immediately. You'll have information, you'll see the CAD evidence, you'll be able to upload any evidence that you want us to review. But you also have an opportunity to do an informal meeting as well. So the portal is great for property owners the timestamp of filing your protest is the postmark on that envelope is critically important. And with the delays in the mail, there's opportunities that your protest may not get postmarked in time to be considered timely. So again, to avoid any confusion or any delays for us receiving your protest, we highly encourage you to do it by e-file. And again, it's much more convenient for you to do it by e-file. Again, you can upload your evidence. We can send you our evidence. You can review that. We can make you an offer to settle it electronically and save you a trip into our office. The protest process begins once you file your protest. You can also submit your evidence, anything that you would like the appraisal district to review. The informal process, we will review. If you e-file, we will automatically send you an offer to settle or a notice that we don't have an offer to settle, but that happens automatically when you e-file. But you can also get in line online to do an informal meeting with an appraiser. Again, you can discuss your value, your concerns with the appraisal district, and we can make an offer that you can accept or decline that settlement offer through the informal process. If you don't agree at the informal level, then you still have an opportunity to go to a formal hearing before the appraisal review board. And you'll receive a hearing schedule from the appraisal review board, and you would need to attend the hearing with the appraisal review board. Again, the appraisal review board is a panel of citizens that are appointed by the local administrative judge, and they listen to the evidence presented by the taxpayer and by the appraisal district, and they weigh that evidence and make a determination at that level. So you begin your process by filing your protest, and you have an opportunity to both do an informal meeting or do a formal hearing with the appraisal district. Informal meetings will begin April 18th, and we will continue with informals through June 30th of 2022. You can choose what's most convenient for you. You can schedule an appointment date and time yourself. You can get in line online. You can get in line online for a same-day queue, but we recommend that you schedule an appointment because anybody that has scheduled an appointment will get priority. People that get in line online for the same-day queue, you will be behind anybody that has already set an appointment date, and you have to wait in line with everybody else that has gotten in line for that day. So we highly encourage you to get in line online and schedule your appointment time. Again, that'll give you priority for your informal meeting. Or you can have the appraisal district and we will schedule it for you. So if you do not get in line online, schedule your own appointment, the appraisal district will schedule an informal for you and send you notice of when your informal date and time is. Again, if you file by paper, that notice goes out to you in mail. But if you do your protest online, that information will be emailed to you. You'll get an email alert that your informal date has been set, and you can go into the portal to see when your date has been set. There is only one informal meeting per property owner, and you have to have a protest be filed before you can do an informal meeting. We will do another webinar on April 27th, and that one will be more specifically on the protest process, how to file your protest, what you need to bring, the information that you'll need to bring as a property owner and provide to the appraisal district. And we'll answer any questions that you might have about both the informal and the formal process at that time. Again, that's our next webinar, and that is scheduled for Wednesday, April 27th at 11:30. We will record that, and that will also be posted online as well. So with that, let me go and answer. We've got quite a few questions in the Q&A, and let me go answer some of these Q&A questions. So the first question we have is, we closed on a house March 30th, and the ownership under the property search and on the CAB website still shows the old owners. Will we get a notice of appraisal, and can we have the ownership info updated and send the notices out again? So the appraisal district will send the information to the property owner that we have on file at the time that we send our notices of appraised value. You're saying that you closed on the house on March 30th. There is about a 4 to 6 week delay for the information to get processed through the county clerk's office and get to the appraisal district. And we have another 3 to 4 week process for us to update. So there is a delay between when you close on a house and when that information is reflected on the appraisal district's website and in the appraisal district's records. However, your information about your property will be posted on our website. So you can go to our website, Again, it's www.traviscad.org, and look at the property search and pull up your property. Even though it's still under the old owner's name, you can still see what the appraised value is on that. And you can still file a protest, even though we don't have you currently reflected as the owner. It's just when you come in, you'll just need to bring proof of ownership of the property so that we can talk to you. So again, closing on the house, when you close March 30th, that's a real close deadline. It takes time for that process to go through the county clerks and then get to the appraisal district's office. So there will be a little bit of a delay there. The question is, so if the market value goes down, does that essentially reset the assessed value based for the future 10% increases? Yes, so your assessed value is last year's assessed value plus 10%, or the current market value, whichever is lower. So if the market value is lower than the assessed value, then the current market becomes the new assessed value, and next year's assessed value is calculated based on that lower market value. So yes, if market values go down, that would reset your assessed value, and that would be used for current future 10% calculations. The next question is, we recently purchased a house. The previous owner had a homestead exemption. Will the new assessed value be continued from the previous owner with the 10% limit, or would our homestead be reset with the new market value? That's an excellent question. So the new law allows property owners that purchase a property to claim a homestead exemption early if the home did not previously have an exemption in place. If the exemption was in place from the previous owner, then you as the new owner get to inherit not only their exemption amount, but you also get to inherit their homestead limitation amount. So for the current year, you will inherit their general homestead exemption, and you will inherit their 10% limitation amount, whatever that may be. Now, you only get to inherit a general homestead exemption. If a property owner had an over 65 exemption or disabled persons exemption, they may choose to transfer that to another property, and they can transfer, but they only get to transfer their over 65 or their disabled persons exemption. The homestead and the 10% limitation would stay with you and your property as the new owner for the remainder of that year. You can then qualify for the exemption in your own name the next year, and then at that time, the limitation would be reset with you as the new owner, and that would mark your base year for your new homestead exemption. Do all owners of properties need to be over 65 to qualify for the over 65 exemption? Yes, in order to qualify for the over 65 exemption, you must be over the age of 65. It must be your principal place of residence. You must own and occupy that as your principal place of residence, and you cannot claim an exemption on another property. But yes, to answer the question, you must be over 65 in order to claim the over 65 exemption. Where can I see the other properties used to estimate the value of my property? Okay. So if you file your protest online and you e-file, we will automatically send to you through the portal our market data that we use to appraise your property. That happens automatically when you e-file your protest. If you paper file, then that information will be mailed to you 2 weeks before your formal hearing. So if you e-file, that information will automatically be provided to you through the e-file portal. If you paper file, it will take longer for you to get that, and it gets sent in the mail. If our homestead exemption does not get considered before the assessments are mailed, do we need to file a protest, assuming we are eventually granted a homestead exemption? No, you do not have to file a protest if you've already submitted your application for an exemption. It does take us, we get a high volume of exemption application. It can take us 60 to 90 days to process that. And because we just mailed out a batch of notices to property owners who had not claimed an exemption, letting them know that they were able to, we've got a high volume of homestead exemption applications that we've got to process. So the fact that it was not on your property at the time that we mailed the assessments does not mean that you need to file a protest. If for any reason we deny your homestead exemption, we will send you a notice that we have denied the exemption, and you have an opportunity at that point to protest the denial of your homestead exemption. So you do not need to file that protest just because it's not currently reflected in our records if you recently filed your exemption. So no, you do not. And when we deny it, we send you a notice and you can protest that denial of the homestead exemption. Is there any documentation required when we're submitting a request for confidentiality under section 25.0225 when your source of employment is a factor of consideration? Yes, there is some documentation that you may be requested to provide to verify that you meet the qualifications for confidentiality. The form will tell you specifically what information is needed, and you would need to submit that along with your request for confidentiality. The next question is the informal hearing in person or online? We will be doing that remotely online. We've got the Get In Line online process. You can get in line for your informal meeting. Scheduling your appointment is the best way to do it. So pre-schedule your appointment. And at the time of your appointment, the appraiser will call you at the phone number that you made your reservation in. This is real convenient for property owners so that you don't have to come into our offices and sit in our waiting room. You get a very specific appointed time and we will call you, and you can be doing your other business and other things that you need to do at the convenience of your home, and we will call you when your time comes up. What is the difference between the assessed value and the taxable value again? Okay, so the assessed value is the limitation value. That's last year's assessed value plus 10%. The taxable value is your assessed value minus the value of any exemptions that you qualify is your taxable value. So your assessed value is the limitation value. The taxable value is the value after exemptions. So taxable value will be lower than your assessed value if you qualify for exemptions. The question is I bought a new build in June of 2021. Will my assessed value be last year's, since last year only the land was assessed? No, if you were a brand new build last year and there was no improvement and you did not qualify for the homestead exemption, you would not get a assessed value based on only the land value. Again, the assessed value only comes into play if you have a homestead exemption, and the first January 1st that you get qualified for that exemption sets your base year for your homestead limitation or your value. So no, you would not get an assessed value based only on the land value for a new build. If I signed a new construction contract in March of 2020, but only closed the house in May of 2021, does the purchase price of my house have anything to do with the assessed value? As you imagine, between March 2020 and January 1st, 2021, the prices skyrocketed, but I still paid the contract price. So our assessment date is January 1st of each year. So we have to look at what homes have sold for or would sell for on January 1st of each year. So the purchase price that you paid in March of 2020 would not really play into what the assessment would be for January 1st of 2022. We would be basing that on the most current market data. Question, when you say the homestead exemption resets the year after you purchase a home, is that the new value based on the previous year's value or the new market value? Okay, so when we're talking about your homestead limitation and when that kicks in, January 1st of the first year that you qualify for your homestead exemption, the market value of your property in that year becomes the base value for your assessed value for the future calculations. So for example, if your market value on January 1st of 2022, and this is the first year that you have qualified for your homestead exemption, if that market value was $500,000, then $500,000 becomes the base year for your assessed value. And in next year, in 2023, your assessed value would be calculated as the $500,000 plus 10%. In reference to over 65, do both the husband and wife are required to be over 65? No, only one of the spouses has to be over age 65 to qualify for the over 65 exemption for the property. And if you are a surviving spouse over age 55 and your over 65 spouse passes away, you can inherit that over 65 exemption and benefit. But that's the only time that the age of the other spouse becomes a factor, is if you are trying to get a surviving spouse exemption, in which case you have to be over age 55 to get the surviving spouse benefit. Next question is, so investment properties are not eligible for the over 65 exemption, no matter the age of the owner. No, the over 65 exemption is only for homesteaded properties. If you are not owning and occupying that as your homestead, it is not eligible for the over 65 exemption. Again, that's only for your homesteaded property that you can get an over 65 exemption. And that is all of the questions that we have gotten. Again, we will record this. Please allow us, probably tomorrow, we will have the recorded webinar posted on our website so that you can go back and watch a replay of it if you need to. Feel free to pass this information along to your friends and neighbors. Again, we try to explain the assessed notice of appraised value so that you know what to expect. And join us next April 27th for our next webinar, which will be the 2022 protest process. And if you have any questions about homestead exemptions, we've got, again, our webinar that was recorded earlier this year on homestead exemptions. So please go and watch that webinar. Again, thank you for joining us, and we appreciate your time. If you have any other questions, feel free to reach our customer service department. And you can also try to do an online chat, and we will try to answer any additional questions that you might have through our customer service department. Thank you, and I look forward to seeing you on April 27th.